In a twist that's shaking up the stock market and every investor, casual and expert alike, like never before, renowned economist Mohammed El-Arian is rewriting the golden rules of investing for everyone as he went ahead and put Nvidia on the same level as the Federal Reserve in terms of importance and influence on the greater market. Imagine a market player so influential it's being compared to the Federal Reserve. Yes, you heard that right. Nvidia is big enough to never fail, and big enough that going against it is to defy the current market flow. It is practically absolutely useless and disingenuous for any analyst or expert to try and bring Nvidia down and sell it short of its actual influence on the market. How did we get to this conclusion, though? Well, El-Arian was in the midst of discussing the usual regarding the Fed's impact, but he also suggested adding Nvidia to that conversation. Surprising, right? But why such a dramatic comparison? Stick around as we delve into what exactly makes Nvidia the new market giant everyone's rightfully buzzing about. Welcome back to Investocracy.
I think John is totally understandable. I think there is a revolution going on in AI, fed by four things that will only grow in importance, and that is computing power, data, talent, and financing. There's a very long runway, both on the supply side and on the demand side for this sector. On the supply side, we're going to see capabilities improving, expanding. On the demand side, it's not just about AI add-ons that a lot of companies are talking about today and trying to do. It is about developing things that are AI native. So when I look at this, I totally understand the excitement about the sector, and I totally understand how that sector can suck investment into many other things. So it doesn't surprise me. This is a secular story, John. Now, will there be excesses in parts of the market? Of course there will be. But there is something real going on that can enhance productivity and have a huge impact secularly.
Nvidia, a name synonymous with cutting-edge technology and AI advancements, is now being discussed in the same breath as the Federal Reserve. And that's what you get with a company being projected to hit $10 trillion in the near future. Mohammed El-Arian, the chief economic advisor at Allianz, turned investors' heads with his statement on X, formerly known as Twitter. He said, "Whatever Nvidia does greatly impacts markets, just like the Fed." For those who've been sleeping on Nvidia's latest moves, it's time for a wake-up call. The Nasdaq and S&P 500 futures showcased some resilience, despite a recent dip in Nvidia's stock post its second quarter earnings report. The headlines? Nvidia outperformed everyone's expectations. The AI computing giant smashed forecasted earnings. The data center revenue soared. Yet, interestingly, Nvidia's shares fell by 3.6% during after-hours trading. Why the paradox? It seems the market is digesting concerns over the sustainability of the current AI rally. Concerns coming from people who are still to this day refusing to vol Nvidia in a justified manner. And you would think, as long as they are undervaluing the company and the stock, then there would be absolutely no chance for the company to reach the heights that every bull is predicting, right? Well, as it turns out, their fighting is quite possibly in vain. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
Called it a secular story. Can we talk about the cyclical impact? Mohammed, we were talking to Jens Nordvig of Exante Data, and he was making the connection between what would happen to growth in America, to productivity in America, and how the Federal Reserve might have to reconsider how high rates might have to be in the years to come. Are you making that connection yet?
In years to come, yes, John, but this is not a Fed that has been basing policy on years to come. This is a Fed that's been basing policies on past data. It's been overly data dependent. But he's right in the sense that when working out productivity and growth potential, you've got to factor that in. It is a transformational, and it's not the only one, John. You know, you've been hearing me say there's three of them. There's what's happening to generative AI, there's what's happening to life sciences, and there's what's happening to green energy. And you've talked to my colleague, Michael Spence, on these issues, and you know how strongly he feels as well.
Remember the adage, "Don't fight the Fed"? L. Arian cheekily suggested it's time to revise it and add to it, "Don't fight the Fed and, at least for now, don't fight Nvidia." His tweet sparked immediate colorful reactions from both sides of the same coin. Some were very negative and sarcastic about the sentiment, putting down the statement as nothing but daydreams or absolutely unhealthy for the greater market if it is truly the truth of the matter, which looks to be the case here, unfortunately for them. Some, however, were very surprised and accepted the notion while immediately moving into the speculation zone about the future of the market and how Nvidia will fare. But we still don't really understand why is L. Arian specifically so bullish about Nvidia. And to be fair, to answer this question is hard, not because there is no single reason, but because it's a blend of multiple robust factors. But before going through all of these factors, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
On the pathway towards reaching some of the targets that you've set forth. You have some of the kind of loftier long-term expectations on a market cap front for Nvidia. I believe we were talking about $10 trillion last time you came on. And so for Nvidia to really hit that in stride over years, what do you see as the pathway towards growth into that?
The pathway to growth is to pay very close attention to Nvidia around the fiscal year guide. That is always Nvidia's big moment. Number one. Number two, the second biggest moment of the year for Nvidia will be when Blackwell is shipping in volume. This will be your Q2 report, but we'll get some signs in Q1 with that forward guide. It's going to be fireworks is how I would put it. Absolute ultimate fireworks for Blackwell will come in Q1 with that Q2 guide. You have to really realize that these guys are on a product release cycle. Therefore, Hopper was out, roughly 2 years ago, began shipping in October. Stock was down 60%. The following Q1 and Q2 report in 2023 were blowouts. So you have to understand that there's a shipping cycle that occurs for this company. Some media outlets have blown that out of proportion. It's absolutely on time. Early next year will be fireworks again for Nvidia, and we will be on track for that $10 trillion.
First off, let's talk numbers. An upward revision of the U.S. GDP growth to 3% in the second quarter has investors adjusting their expectations for the Federal Reserve's future moves. The buzz now revolves around what the release of the Personal Consumption Expenditure Price Index report will mean for monetary policy. And right in the middle of all this economic recalibration stands Nvidia. Why does Nvidia hold such sway? One word: innovation. Nvidia's second quarter earnings beat expectations, boasting solid gains in data center performance. However, their gross margin slightly contracted from the previous quarter, even as they forecasted above consensus revenue for Q3 and announced a massive $50 billion stock repurchase authorization. Let's just say their financial wizards are doing some high-level magic. Yet, despite this, Nvidia's shares tumbled 3.6% after the market closed, probably causing a few heart palpitations among investors. Now, we all know that analysts love to chime in with their ratings and forecasts. JP Morgan's Harlan Sur, for example, rates Nvidia stock as overweight with a price target of $155, up from $115. Sur points to robust demand in the PC gaming sector as a revenue driver, alongside strong prospects in data centers and automotive segments. He's got a sunny outlook for Nvidia's expansion, despite some market jitters. Meanwhile, Goldman Sachs' Toshiya Hari takes a more cautious approach with a neutral rating, citing the need for margin adjustments. He wasn't quite so gung-ho, but did acknowledge the company's impressive data center revenue. Remember, investing is like a roller coaster, thrilling for some, stomach-churning for others. But isn't that what makes it exciting? Imagine riding the waves of Nvidia's highs and lows, confident in the long-term ride because, after all, don't fight the Fed and, at least for now, don't fight Nvidia.
Is going. In the case of with Nvidia, it's a belief, a strong belief. I'm staking my career that AI is going to have a bigger impact than the internet. And if that's the case, this trading around Nvidia today is largely noise, even though it is a $3 trillion company. And the reason why I still am comfortable and think of this in that same class as Apple and and Microsoft is that ultimately is if you believe that AI is going to be as transformative, more transformative than the internet, there's a second belief you have to have is that the way to get there is through scaling laws, which basically say you have to throw more compute and data at the problem to solve for intelligence, then NVIDIA is going to be a winner. And I think that it is in a great place. I do want to add an additional angle to the context of just buy and hold forever is that Deepwater, we own NVIDIA. I think the next 2 years are going to be far better than what people are expecting today. But at some point, when you're a hardware-only company, there is a point of deceleration that needs to be taken into consideration. And I think that 2 years, 3 years from now, this may be a position that we'll trim. But we think today is the time to own it.
So, what's the final takeaway here? Nvidia is more than just a tech stock. It's a market mover with considerable influence. Despite short-term dips, the company's long-term prospects in AI and data centers are nothing short of extraordinary. The current stock dip? Viewed by many analysts as a golden buying opportunity. As Nvidia navigates through market volatility, it continues to break new ground with pioneering technologies and innovative solutions, keeping it at the forefront of investors' minds. The stock currently stands as a potential powerhouse in the tech sector, a beacon for those looking to invest in a promising future. What's your take? Do you see Nvidia as the market giant that L. Arian and other top analysts believe it to be? Share your thoughts, and let's keep the conversation going. After all, the stock market isn't just about numbers. It's about stories, predictions, and the thrilling ride of investing. Let's see where this exciting saga takes us next. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen.